GetCrack. Wake up, motherfucker.
All right, set up the mic right. All right, howdy, folks. So it's gonna be a quick one today. Today was quite interesting. All right, but let's see what we got here. I'm gonna talk about some articles about the Mar-a-Lago. Uh, I guess Accords. I don't know. I think it's just a rumor for now. But let's look at this. Let's look at this. What happened today? So around 10 a.m. my your time, Eastern time. Well, most of your time. I don't know. I don't know where you guys are at, but my time is 7 a.m. So we had the ISM manufacturing, okay, PMI, and we got a little bit weak, right? Okay. The employment for manufacturing sector is a lot weaker than expected, and then you have the prices a lot higher than expected. So a lot of people right now are wondering about, are we going to have stagflation, right? So that's kind of like the new, well, not really new, but it was the du jour market troublemaker for last week, pretty much after the whole Walmart earnings. I guess a little over a week and a half ago. Okay, on Thursday, that Thursday, two and a half weeks ago, a week and a half ago. So I'm gonna play a little. Let's see what we got. I'll play this video here. Okay. Cool. And we're gonna have to deal with this. All right, for Wednesday. So we're gonna have ISM service data on Wednesday. I think it'll come out the same way. I'm not gonna be optimistic, but you never know. All right. You never know. Maybe it'll change a little bit then, but I think this is gonna be a big trouble. Okay, so now I'm gonna show the charts. Now let's see what we got here. So let's look at MSTR. So I sold in the morning. You know, you could tell right away with Bitcoin, it was weakening into pre-market. All right, and then this last little high an hour before the whole market opened. Then you go pre-market, get this nice red candle. And once the market opened, another red candle. So this is a 40-minute chart anyway, if you care. So you can see like the high volume coming in. So as you know, Bitcoin really follows when the market opens and closes, okay? Because there's a lot of ETFs that have holdings in Bitcoin, and when they start trading, it really influences how the Bitcoin itself is moving on the spot market. So yeah, this is a big factor, really big factor, and it's not going to end. It's just going to be like open and close for the New York Stock Exchange. Has a real big effect on what it does. And so if we look at the NASDAQ, you can see like, okay, today, well, on Thursday, you see this NVIDIA candle here. So that's when the market opened and NVIDIA start going down. And then now on Monday, you have another red candle. You open higher and you start going down. Oh, bad sign. Really bad sign. So I was trying to watch and see if anything interesting would happen during the day, and I'll come on here to talk about it, but nothing. So it kind of recovered, but you can see like with that hourly candle, it never tries to do anything to get above half of this body. Okay, it's stuck there. It's been bouncing up and down after you had like here. I'll put this in an hourly chart. My bad. I put in 40-minute, which had an interesting look to it. But now, okay, I'll give you this one. All right, so you the hourly chart was 65-minute basically, and you have this candle, okay, and then now you just stay like below that body, okay. So now you have a different look, right? This is a 65-minute. My bad. I set it at 40 for the Bitcoin, but then you come in here and you go right down to 502, 503. And then for the rest of the day into the close, It just went deep dive. Okay, so I think this stagflation stuff, yeah, it's a big deal. It's going to be a big deal for the whole week until we get to unemployment. This is going to really set the tone. Now, does that mean we're going to roll over? Oh, that's a good question. It's going to roll over now. Should we start shorting now? Oh, okay. Now, if you did MSTR, you could have shorted right away here. You know, if you just had the balls, you'd been like, yeah, I'll just trade out my longs and just short it. Like, I didn't know it was going to do this. But if you look at this one, 13-minute chart, see it rolling down right through this gap area, because this gap area was set right here in November, and you got this move between 278 and 297. Okay, and now we're gonna see, like, okay, I put this in the hourly. You can see this, right? Big red candle here. Now we can put the 13-minute. I'd evenly divide the whole day with 13-minute candles, and you can see, like, here was when the ISM number came out. Okay, it's trying to hold here, so it's dropping into the data release. It holds here, then it just falls through, tries to recover, and if it made another attempt at here, I would have came on back on to stream this stuff and say, hey, you guys should just maybe consider buying. But it didn't do that. You have this red candle eliminating this. So this area here, this 278 area, which is like kind of, I set it to this point at Tuesdays, February 25th, this opening area here, and you can see it had a hard time going through it on Thursday. So Monday to Tuesday, got Thursday, so you open here on Tuesday, so you crash through, now you make another gap, and then you come back, you fight again, and you fail, and guess what? Red candle, yeah, it's gonna go lower. So then I waited for the end of the day. I'm waiting for the end of the day, see what happens, right? Okay, now we got this. So if I came on here before the close, would I tell you guys to buy it or not? You could, but I personally don't like catching knives like that, because if you look at the QQQ, the NASDAQ, if you see how the day was ending, this was terrible. This is a terrible candle to have after this one. This green candle just goes to halfway of this. You try to get higher, then you just fall down like that. That means the next 2 days, you can catch the low again. So let's say it doesn't get any much lower than 493. You can just wait. You don't need to rush into this. So the next 2 days, watch into Wednesday. So Wednesday we'll have the ISM service number on 10 a.m. Eastern Wednesday. And then after that, we'll have Marvell. Marvell will report, okay? And tomorrow, okay, Marvell will report, and it had a bad, nasty day. Look at that. So the whole week it's already starting low. If you want to catch something and go long, now this is going to have earnings, right? Wednesday. And then Broadcom has earnings Thursday. So both of them after the close. What I would say is, if you want to trade it, and let's say you assuming now that both of those earnings are going to be all right, and you think unemployment will also be all right, and you think ISM service is going to be all right, okay, you could buy the knife here at the end of the day. I mean, I was very tempted. It went below 20 for SOXL. XOXL is the 3x leverage of semiconductors. So if you think two of those semiconductor earnings are enough to recover the losses from Nvidia from last week, that's a good trade, because let's see, I think you can get 30% off of this guy. Let's say it goes down here. You can catch it here tomorrow. 30%, 26. So from 2026-ish, 25-ish. Yeah, okay. Okay, maybe it can go up to 45%. I don't know. I mean, we gotta be really lucky through Friday then, though, and undo all the damage right now. I could see that. I could see that. But if right now you got to look at Nvidia, look at that thing. Ooh, this is done. This is done. This is ready to collapse very shortly. Okay, and you'll see this back at 94 again pretty soon. Okay, yeah. Yeah, you can see this pretty shortly. Oh man, this is terrible. This is a whole distribution structure right now. Ooh. Yeah, so the market will definitely follow Nvidia. Yeah, pretty much. I don't see any turn for this one. All right, guys. That's it. Let's look at the SPY, S&P 500. You can see this level here, this box, between 592 and 597. So we've been struggling here, you can tell. So it makes sense why, if this thing didn't push through today, it would just fall back. Yeah, it's just too easy now. You have to hold these levels, but if you can't, you just can't do it. And then if we do like the QQQ, you can see we are already in this lower level, and we're just fighting to stay in this box, and we're having a hard time. Right now we ended at 497. So yeah, anything could just shift this thing lower quite easily, and then they'll take the S&P down with it. Now let's see what other sectors got hit. So S&P down to 583, so, and 39 cents. I mean 97 cents. Yeah, 97 cents. So if you look at oil and gas, let's look at this one. Oil exploration ETF XOP making lows here. Nasty. We're at the bottom of this range. So that's why I said, if you want oil and gas companies, wait for the summer. We gotta get closer to the summer, sometime around spring, I'm guessing. You can buy those companies. Now, if you want to do natural gas, FCG is the ETF, and you can look at that same thing. It has a similar shape. You have a lower resistance here. Okay, we can hit multiple times. So this area, so yeah, it's pretty close. Pretty close. I'm thinking like maybe I'll do a false breakdown, and you can start scooping up some energy stocks from there. So let's see what happens as we get closer to the summer. Now, if you look at natural gas itself, it's up. All right, to about $4.22 per million BTUs. So this one looks good, very nice. This is because of the weather reports coming out this morning. So we see a nice move up, but we're still fighting in this area here, this rectangle. You see, we keep going back and forth through it. Yeah, hold off. I wouldn't try to get Boyle right now at these prices. So Boyle, the ETF that tracks that, is around $90. Okay, so I would hold off on getting back into this one. What else? Let's look at crude oil itself, down to $68 a barrel. So yeah, we are getting quite low. I should see this thing spike down a bit. Okay, and this thing coincides with the dollar right now weakening. Dollar down. Dixie, the DXY index, down 0.95%. So interesting. And this will come into play when I talk about the articles, all right, about the weakening dollar and what Trump might do with this. And it might have something to do with the minerals in the Ukraine as well. Now, what else we got to look at? Bonds. So I'm going to do the TLT, look at that ETF for the 30-year, 20, 30-year bonds. Yeah, we're still hanging out at 92 here. Maybe we'll get to 95. And the stagflation thing definitely won't help in making bonds unattractive to stocks. Okay, let's see what else we got. So I'm going to talk about a few stocks that looked good in the morning. Okay, so that's why I'm going to mention them. So I'm going to pay attention. ASTS has earnings. Let's see. Okay, it's up about 2-something%. I'll keep paying attention to this one. If this thing can keep holding at 25, I might be interested in it this week. See what happens. If the market tries to recover into next week, yeah, sure, go for it. ASTS. And we got, see what other risky ones we got. Oh yeah, Intuitive Machines, LUNR, Lunar. So they got the rocket already on its way to the moon. It's going to see if that lander is going to land upright in a few days. So, okay, I'll keep watching this. Might be worth gambling on at 13, 12 bucks. See if this thing can rise back to 16 and 18. Okay, I'll do a quick scalp. I'll keep watching it, but no guarantees I'm gonna like this one, that I'm gonna play it. Another one is DNA. So this one is still at this low here. Okay, yeah, I'm just gonna keep paying attention to it because it got a nice nasty reaction from earnings. See if it can get down to a lower point. And yeah, this is something I'll just keep watching because it could be something to get later on in the coming months. But yeah, just keep paying attention to that one. LMND, that's another one I mentioned last week. I like how it was doing. It tried really hard to stay up 9% today before it just got pulled down. But you can see it's just down like 1.65%, right? After the whole market fell through. So this earnings here reaction is really strong. So this stock does want to go up eventually. So definitely another one to watch. Okay, Reddit. All right, Reddit. Everyone's hated stock here. Put that. Okay, it's back at this range. Okay, let's see that. That's around 150 something bucks. Okay. Okay. All right. Yeah, I'll keep paying attention to this one. I don't know. It might just fall through, right? If this thing breaks down, it's going back to 100 later this month. But yeah, I'll keep paying attention. See if it's worth scooping up again later in a few months. This might be a good play to do because it's easy to push back up, I think. SOUN, yeah, this one had earnings last week. I liked how it moved. It bounced off of this resistance area. Support area, $8.88. It's coming back through here. Okay, yeah, I'll keep paying attention. I mean, this thing, if it keeps holding around, I mean, you don't know, right? I mean, a few months, it could go down to $5 if the market really takes a dump. But just yeah, keep an eye on it. You know the levels, so yeah, keep an eye on it. WGS still good. Here it's trying to hold at 95 again. Okay. You know, if this thing could be ready to go too, right, in the second half of the year. So I think a lot of these stocks, they'll do well in the second half of the year. I think very few of them are really worth trying for a quick trade now. I mean, LUNR maybe, because it's going to have news in a few days, right? And if the market recovers, it could be a quick trade for the week, maybe 2-3 days worth of trading this one back up here before it just rolls back over to 9 something. That's my guess, yeah, for that. Okay, Archer. Oh man, yeah, I'll come back to this one some other time, but I did like how it reacted to earnings. It supported 7, but yeah, it's just gonna follow the market for sure. This one isn't gonna survive. Yeah, LMND is probably the only one that looks really good, but even that one, I don't think it'll survive either. So tomorrow we'll have Target. Target earnings, that's going to be important because they're going to compare this to Walmart. If Walmart started having a bad time, well, and Target says bad things too about what the future of this year is going to look like for consumers, oh God, it's going to really shove everything down. Because the XLY, the ETF for discretionary, look at that. This whole thing is a top. Yeah, this whole thing is a top. You can see like this. This whole thing is a structure that looks ready to just fall through. Once you see that, it's over. Yeah, for the next 3 months. Next 3 months. So the market's going to go pretty nasty in that time. Once this thing collapses. Okay? So let me look at the ratio, XLY, XLP. This is what like Tom Bowley likes to look at. Yeah, this one, Oh, yeah. Once you see this, you're not going to have a bull market for the next coming months. Yeah, no way. So just prepare. Just prepare. I don't know if we're going to have to short very soon this week, or we're just going to have a rally into Friday, and then that continues into next week. Then you'll have to prepare to short for Jerome Powell on the third week. Okay, the third week of March. So after the Ides of March, essentially. I think next week Monday we'll have Japan. So they'll have their own little talk. Let's see. I think so. Let's see. Japan consumer confidence. I have to pull up the calendar for Japan, but I think it's going to be on the 10th. So let me check. Let's see what's on the 10th. GDP, household spending. Okay, nothing there then. So it's actually the 18th. Oh, my bad. Okay, the 18th. So we got some time then. Yeah, we got some time. Okay. So maybe the market can pump up into then. Let's just concentrate on the US, all right? We won't have to worry about Japan until the 18th then. Well, unless the GDP stuff on Monday is going to matter. So, that's fine. All right. Let's see what else got to cover. Covered that. Oh, gold did okay today. It's definitely trying to bounce. Okay, so I think we might go sideways for a little while on gold in the coming months, but I do suspect weakness. So either it's going to keep holding above 2,800-ish, or it's just going to roll over a little bit more and come down to maybe 2,700 again. Maybe, but I think it's pretty strong. So let's look at the volume for gold. Yeah, we'll have to see. We'll have to see. About silver. Silver. Still at 32. Yeah, that's not going to work. Yeah, silver's so weak still. God. Yeah, we'll see how that come back up to it. Okay. Yeah, I'll have to see how the silver goes. All right. Okay. Now I'm going to go read the articles now. All right, guys? So I'll have to go to that. Let me make sure I cover everything I needed to cover. To cover a little bit of oil, a little bit. Uranium. Okay, let's see what uranium. I think uranium went down some more. Yeah, it did. Nasty. So this is the ETF for the miners for uranium. There's a video on CNBC. I probably play that tomorrow. The guy was talking about like how, all the uranium stocks are kind of following Nvidia. So if Nvidia goes down, uranium just goes down, follows down with it. Like you can see, like here, CEG, uranium, utility, basically natural gas / uranium. Talon, same thing, not good. So these guys were looking good. Oh yeah, GE, Veranova. Ooh. Okay, if it does drop through, yeah, I would definitely be looking to buy again here. I don't know if it's going to go back down here to 170, 160, but hey, it's possible now. It's definitely possible now. VST, yeah, this thing's done. This is definitely a collapse. It'll probably try to get back up to 140 a little bit and then struggle and then come back down to 105, okay? So Deere, that's the one like I really like. Yeah, it was down 3% today. So for you guys that missed out on getting it at 400, yeah, you probably get another chance. You'll get another chance on Deere, DE. Okay, Mexico, yeah, another one that's since this went through like 51, right? We got the tariff stuff to worry about tomorrow. So once the tariffs get in place, I think all the bad news will be out. Everybody will know, yeah, there's tariffs. Gonna be tariffs. So if this thing tries to hold around 50 and stay close to 51, all right, I might get in, because the only thing worse now would be getting higher percentage on the tariffs. I don't think that's going to happen. So it can only be good news that goes up. So the next following 2 months Let's see how it does, how it behaves. But with a weaker dollar, yeah, I mean, Mexico is still attractive. Yes, and China as well. But yeah, don't go into China right now, as you can see. Like, we already got red days here. I think China had its data come out. Let's see what its economic data came out. Let's see what that says. Okay, let's see. Okay, and MBS manufacturing and Kyson manufacturing. It was okay, but yeah, I don't think that's going to stop it from moving down right now. I think it's overbought a lot of the Chinese stocks. All right, TME, Tencent Music Group seems to try to be holding on here. Okay, yeah, I'll keep my eye on this one. Futu Tiger, I guess that's done. Yeah, they tried, but they're gonna fail here. Overall tech, K-Web ETF for tech in China, yeah, it's not gonna. I think JD will have its earnings. Yeah, so JD, the company, yeah, Chinese company, will come out in March. Okay, Wednesday. All right, Wednesday. All right, I'll watch it in the morning, see what happens. Anything else? No, let me see what else is in the calendar. You got Best Buy. I don't care about that. AutoZone should be good. AutoZone should be fine tomorrow. SE. So AZO. Yeah, I think this will be fine. AutoZone, AZO, and SE. This stock's always popular, huh? Okay, let's see what happens. I never played this one, but yeah, I'll watch it anyway. See how it goes. Okay, let's see what else. Wednesday we got Marvell. Okay, we have RGTI. All right, quantum computing. That's popular stock. Oh, this one, yeah. Well, I think this one's probably done for. And speaking of stocks that are good to short, I don't know. Mars Squarely likes to short that one, RGTI. Like Friday, I said, you know what? You should short like AAOI. So if anybody was interested, then they could have shorted it, because you can look at how it did in earnings, the reaction to it. It's just fighting here, and guess what? Friday went down, and I said, oh, looks like it's a good short. Monday dropped, negative 18.94%. So see you at 7. So if you shorted that one, yeah, that would have been money right there. Anything about put spread strategy? Nope. Actually, I'm gonna try to do an option presentation tomorrow where I found these nice little clips all together, and I think it'll be interesting. But I think it's more advanced stuff. It's not really like basic stuff, but I think some people might find it interesting because it shows the power of how to do options. And how to limit your thing. But yeah, I don't know about the put spread. I've heard of it. Let me see. Let me look it up. Antoine. Bear put spread. Bear put spread is a type of option strategy where investor or trader expects a moderate to large decline. Yeah, that'll be good to do nowadays, right? Yeah, if you can get it right. Let's see. Okay, it's achieved by purchasing put options while also selling the same number of puts on the same asset with the same expiration date at a lower strike price. Okay, I see. The maximum profit using this strategy is equal to the difference between the two strike prices minus the net cost of options. All right, yeah, I got that. A put option gives the right not the option. Yeah, blah, blah, blah. We know that. Okay. A bear put spread is an option strategy implemented by a bearish investor who wants to maximize profit while minimizing losses. I got you. Okay. Yeah, okay. So, Antoine, I had this cheat sheet. Shoot, let me find it. God damn, I had this cheat sheet. It was convenient. Like, you should download it. Like, I'm going to get the link here. Let's see. Cat box. Okay, let's see if this one was it. Nope. See what else. See if I can find it. PNG. All right, here. This one. Okay, I found it. So Antoine, download this one, print it out like as a poster, and stick it on your wall. Yeah, so this will help you. This will help you. Yeah, they list out all the basic strategies in a. I've been lucky. I did 2. Oh, okay, that's good. That's good. You know, you gotta experiment and try. You know. I mean, that's how Dennison said he did it. Yeah, just keep practicing and see what you did and what's going on. But I think it's good. Like because like the good thing about options is like you don't need a lot of money, right? You can just buy a little contract here and there and goof around and see like, oh, okay. If you lose like $50 or something, right? If you do minimize your losses, you just be like, oh, if the contracts are cheap anyway. I don't know. Some of these stocks are going to be pretty pricey, I assume nowadays, because everyone does it. But avoid the 0 DTE because that's probably why a lot of the stocks are moving crazy right now, because everyone's using 0 day to expiration. They're just day trading with that shit. And then the hedge funds are hedging with that stuff too. It's just like insane. I don't know what's going on with these people. They're nuts. So let me get the whole thing. Yeah, I've been doing cover calls like 10 already. That's good. That's good. Yeah, if you're practicing, that's great. Yeah, those should be easy to do. Okay, here we go. See this poster. Yeah, you can print this whole thing out, and yeah, you got the bull put spread. Oh, there's a bullish put spread. Okay, and then there's a bear. See, this thing goes through all like the thing. So if I want to do a bear put spread, so it looks like I could do a bullish put spread too. So it looks like the reverse, right? I'm guessing I'm selling the put or something or whatever. Yeah, I'm buying and selling at a different location, and then if I'm doing bearish, I sell and buy at a different location. Okay, see, and so I don't know if you understand what this that usually the options guys, they draw it like this. Yeah, this like profit loss, and then they put the A and B over here, and yeah, so you can limit the loss, limit the profit, but that's fine, right? You just want to say, okay, this is the loss I would get if I'm wrong, and this is the thing I would get if I'm right. Yeah, perfect. There you go. Yeah, so this is helpful. So when you get to know some of these, you know, it's great. So here's the income one, right? The covered call or whatever. There should be somewhere here. Let's see, covered short strangle. What the heck is that? Oh, ladders. Yeah, I heard of those. That looks more advanced though. Some people keep saying like the ladder strategy, you can easily make money, but you know, I'm always skeptical. It's just like, what? So you don't need to do nothing? Like, it's so easy. Yeah, all right. I understand. Watch 60 videos. Oh, man, Antoine. Yeah, shit, man. You watch 60 videos. Yeah, there's a lot of option videos on YouTube nowadays. Ever since like the COVID days. Yeah, a lot of people do this stuff. Oh, naked? Yeah, never do naked, as far as I know. Yeah, covered call. Here's the income strategy. So it says here like nearly unlimited loss. Man, I don't like that. Man, yeah, this thing's probably something like you have to. Yeah, that's why I always wondered, right? Everybody's like, oh, it's easy. You can get money just by holding a stock and doing covered call. You're just like, wait, hold up. What's the catch here? I guess that's the catch. If you're wrong, you could F up and get nearly unlimited loss. All right. But here, let's see. Novice, basic, long call, long put, intermediate level, bull put spread, bear call spread, bull call spread, bear put spread. All right, you're on intermediate level here. Advanced, so advanced call ratio back spread. What the heck? What the heck's the jade lizard? All right, there's the jade lizard. Call ratio spread. Oof. Strap, guts, strip. What? All right, whatever, man. Yeah, this is pretty cool. I think, yeah, you get everything in one little poster here you can put up on your wall, man. All right. Yeah, one of these days, you know, we can go over some of them, I guess. But the videos I'm talking about, I was going to show some examples, like with Skrelly, had like a little thing. We got Samantha LeDuc like showing a little bit of like how you use it to trade like volatility without knowing like which direction it goes. And then I'll put it together and I'll go one by one. And you have Talib. Talib is the guy who writes all the books about options. Like he's the super expert on it. But that goes through a lot of math, so most people don't read his stuff if they're just like whoa. I don't need to know that much, you know. But I think it's good to understand a little bit. All right, I'll go back to talking my articles now. Let's go. But yeah, Antoine, like look at AOI. See if you can short that sucker. Okay, that'll be interesting to see if the options in that stock are. Hopefully it's not too expensive, but it might be. It might be getting too popular now. But I mean, it's a small stock. I hope it isn't. It should be easy for you to get cheap options on that and short the hell out of it. Okay, let's see. Where is it? Oh, I had the right window open. My bad. So I'm gonna go here. What a Mar-a-Lago Accord would mean for the dollar? All right, so this was written in February 25th, 2025. President Donald Trump's aggressive plans to shake up how the U.S. trades with the rest of the world have fueled speculation about the potential for a grand multinational bargain that would deliberately weaken the dollar, helping American exporters compete with rivals such as China and Japan. Trump hasn't said he'll do such a thing, but that hasn't stopped the Wall Street chatter. Analysts have already settled on a name, the Mar-a-Lago Accord, after Trump's private club in Palm Beach, Florida. Much of the attention has focused on a paper by Stephen Miran. All right, Trump's nominee to lead the White House Council of Economic Advisors, published in November 2024. When he was a senior strategist at hedge fund Hudson Bay Capital. Interesting. In it, Miran laid out possible policy options for reforming the global trading system and fixing economic imbalances driven by persistent dollar overvaluation. He's not the only one in Trump's orbit thinking along these lines. Before being picked as Treasury Secretary, Scott Bessent predicted in June that there would be some kind of grand economic reordering in the coming years. What would a Mar-a-Lago Accord attempt to accomplish? The rough concept is this. Trump has promised to deliver a golden age that will include a renaissance for American manufacturing and exports. He also has long-standing concerns about the size of the U.S. trade deficit, which hit a record $1.2 trillion in 2024, characterizing it as effectively a transfer of wealth abroad. The trouble is the dollar's exchange rate has been historically strong, undermining U.S. competitiveness by making imports relatively cheaper. Indeed, some analysts view the dollar today as overvalued based on economic models that look at things such as the domestic purchasing power of a currency. This overvaluation and its effects means Washington has an incentive to reach some kind of deal with other nations that would address the currency strength. A very strong dollar. Gauges of the US dollar indicate it's at its strongest since the 1980s. Okay. Have similar accords ever been agreed? Yes. In 1985, a group of governments agreed the Plaza Accord, named after the New York hotel where officials met, against a similar backdrop: high inflation, high interest rates, and a strong dollar. A deal was reached between the US and France, Japan, the UK, and then West Germany to weaken the dollar against their currencies. The pact was made on the basis that the greenback's huge move higher was damaging the global economy. The surge in the dollar had been spurred by the tighter monetary policy of Federal Reserve Chair Paul Volcker to bring down inflation, as well as President Ronald Reagan's expansionary fiscal policy with tax cuts and increased spending. Ooh, that sounds familiar. That really does sound familiar, doesn't it? Antoine, it's a AAOI. AAOI. So yeah, check out if you can go look at the options pricing for that. Maybe you'll find it worth shorting if it's cheap. It's still cheap. At the time, Japan was dominating exports and sparking a protectionist backlash from U.S. lawmakers, much like China is today. While the accord succeeded in depreciating the dollar, it was later blamed for strengthening the yen too much. Plaza was followed in 1987 by the Louvre Accord, which attempted to draw a line under the dollar's decline and cool the yen's gains. In Japan, the agreements were blamed for playing a role in the nation's descent into economic stagnation in the 1990s, a period known as the Lost Decade. A lesson that won't be lost on China as it grapples with its own deflationary pressures, a real estate crisis, and manufacturing overcapacity. How could a Mar-a-Lago Accord work? A traditional approach would invoke American trading partners pledging to boost domestic consumption of the goods they produce, reducing their manufacturers' reliance on exports to the U.S. It could also incorporate agreements to intervene in the foreign exchange market to forcefully tilt currencies in the desired direction, although the market's gargantuan volume of daily trading, $7.5 trillion at the last count, would make that a challenge. There could be provisions about interest rate adjustments too, but central banks are even more independent today than they were at the time of the 1980s Accords. Yeah. I mean, I'm guessing that Jerome Powell might get his ass kicked out of the Federal Reserve So the earliest President Trump could do that would probably be around May, right? May of next year, 2026, I think. There could be provisions about interest rate adjustments too. Yeah, okay, I read that. The language from Mirren and Bessent last year indicated they favored going beyond previous templates. Mirren's analysis embraces the concept that current account deficits, when the value of a country's imports exceeds its exports, are the flip side of net capital account inflows, when more money is flowing into the country than goes out. Because the dollar is the world's reserve currency, other nations keep buying it. That results in a persistently overvalued dollar that weighs heavily on U.S. manufacturing. Any multilateral accord would need to diminish this source of upward pressure on the greenback. How would U.S. debt figure into the discussions? One area of recent speculation has centered on the idea of the U.S. Treasury issuing government bonds that don't pay interest. Oh, God. Okay, yeah, I know about this. I think John and I discussed this before. So-called zero coupons, mature in 100 years. In his November piece, Mirren cited a suggestion written in a June paper by former Credit Suisse analyst and founder of the Ex Uno Pluris research firm. Zoltan Poznar. Yeah, I know him. Poznar. Of an agreement between the U.S. and its military partners, whereby in return for American security guarantees, allies are required to buy these century bonds. Okay, Zoltan Poznar, I downloaded some of his PDFs when he was at Credit Suisse. He's an interesting guy. So during the whole time Russia, Ukraine were going at it, he was essentially saying that we were getting into a new world order through commodities. So I think this makes a lot of sense. So by the third article I'll read here, probably we're going to go over Ukraine. So this will make a lot more sense to me then. Others have raised the idea of the Treasury swapping some of the existing foreign holdings of U.S. government debt for long-dated zero coupons. Allies that refuse to participate could have their security guarantees pulled or be hit by tariffs, or both. What would be the consequences of such a restructuring of U.S. debt? The thinking is that it would help reduce U.S. interest rates and the fiscal deficit, thereby weakening the dollar. But such a radical idea could also risk a crisis of confidence in the $29 trillion treasuries market. The federal government's long-stated debt issuance mantra is to be regular and predictable, putting pressure on allies to engage in a debt swap or to buy current century bonds could do unpredictable damage to the treasury market's reputation. A key reason these securities have long been the world's benchmark is that they're viewed as highly liquid, in other words, easy to trade, and subject to the universally understood rule of law. The prospect of upending this landscape is why it's difficult for many to envision a Mar-a-Lago pact involving debt swaps taking place. Okay, but wait, hasn't Trump championed a strong dollar? Both Trump and his economic team have said that the U.S. remains committed to maintaining a strong dollar and have threatened tariffs on emerging market economies that seek to move away from using the greenback to settle trade. Pursuing a policy that both supports the dollar's role at the center of the global economy and seeks ways to weaken its value would be a tricky balancing act for the administration. What are the possible risks of a weaker dollar for the U.S. economy? A weaker dollar would drive up the cost of imports and could send inflation higher as a result. It could also scare off investors who flock to U.S. assets for their higher yield and safe haven status, potentially diverting some of those flows into rival currencies such as the euro or the yen. Okay. All right, let's go here. Make them a Mar-a-Lago Accord they can't refuse. So this is an opinion written in February 27th by John Authors. Trump has the means of persuasion to get a broad dollar agreement, except with the country that really matters. Okay. Let's see. Dollar me this, dollar me that. All the questions arising from the hectic first month of the second Trump administration find their expression in a dollar. So far, Trump 2.0 has been very different and far more dramatic than Trump 1.0. But the US currency is treating it so far as a direct replay. This is how the broad DXY dollar index performed from a month before the 2016 and 2024 elections. They've been identical, and if that carries on, there's a lot more dollar weakness ahead. All right. So that'll be good for gold, I think. Repeat dollar performance under Trump 2.0. So far, the dollar is following the same pattern from Trump's first term. All right, see that? So that's the blue, the first term, and now we got the black in the current term. Many factors drive the dollar. In 2017, it kept weakening until the administration delivered a big tax cut late in the year. Then tariffs in 2018 sent it higher. But this time, its future seems to be bifurcated around two contrasting and plausible views of how Trump's financial policies will develop from here. Both find ample support in things the president and his advisors have said. So the Mar-a-Lago Accord is a weaker dollar. Okay, we already know that. The key point for dollar bears is that Trump wants a weaker dollar and has some means to achieve this. Foreign exchange is reciprocal, and in practice, it's difficult to weaken a currency without cooperation. There's a precedent in the 1985 Plaza Accord, in which officials from the then much smaller capitalist world agreed to intervene to weaken the dollar. The years of Reagan prosperity resulted, but Japan's experience, once it had agreed to make its currency less competitive, might make other countries like China unwilling to do the same. Scott Bessent, Trump's Treasury Secretary, has made clear that he hopes to achieve some such deal. Rather than New York's Plaza Hotel, the idea is that a new accord will be struck at Trump's Florida estate, which is why the whole notion is now known as the Mar-a-Lago Accord. The idea is that other nations would agree to direct investment in the U.S. to head off a trade war, and also coordinate to make their currency stronger and thus make the dollar more competitive. For the arguments as to why you should take this seriously, first read a user's guide to restructuring the global trading system written by Stephen Mirren, the hedge fund manager and former Treasury economist who is set to become the chair of Trump's Council of Economic Advisors. It's a startlingly ambitious and wide-ranging document that has spread far and wide electronically since publication in November. It argues that tariffs provide revenue, and if offset by currency adjustments, present minimal inflationary or otherwise adverse side effects. The nub is to get others to agree to the changes. As Trump has shown in the last few weeks, there are plenty of other sticks in his arsenal beyond tariffs to persuade others. For arguments promoting it, try this Odds Lot podcast with Jim Bianco. Yeah, Jim Bianco's pretty good. So, all right. So I guess he talks about this. In Besant, the U.S. has someone with the intellectual nous to structure a deal. And in Trump, an unpredictable figure who successfully inspires fear in his interlocutors. A potent combination. For the arguments against, I recommend this podcast from T.S. Lombard, in which the economists Dario Perkins and Freya Beamish lay into the concept. Perkins points out that central banks and governments don't believe in intervening currency markets anymore, and the only government that could change its currency is China's. The yuan is tightly managed, but Beijing's problem is that their domestic economy is broken, and their currency wants to go down, not up. Another element is that foreign governments could help the U.S. fund itself and avoid any downward pressure on the dollar by swapping their currency holdings of U.S. bonds for zero-coupon, non-marketable century bonds. In other words, the U.S. would get financing locked up for 100 years without having to pay interest in the interim, and foreign creditors wouldn't be able to trade it. Set out like this, it's easy to see why Perkins calls the idea mad and devoid of logic. It's also hard to see how this could be achieved without a Godfather-level amount of coercion. But the arguments are there. The U.S. is in a powerful position, and it's obviously what the administration wants. Trade war equals strong dollar. The key issue that dogs the weak dollar call is tariffs. All else equal, when a nation levies tariffs, it strengthens its currency. But despite the noise, the only concrete action until now has been an extra 10% tariff on imports from China, way below the 60% Trump proposed during the campaign. So far, the measures lack the decisiveness that Trump once promised and cast doubt on his claim to the crown of William McKinley, the protectionist 25th president and tariff king. To quote Jonas Golterman, market economist at Capital Economics, on trade policy along with fiscal, the key policy area for currency markets, there's arguably has been more sound and fury than substance. Market participants appear to have interpreted the administration's approach as more open in negotiations around trade than might have been expected based on Trump's campaign rhetoric. Is it safe to assume that more tariffs aren't coming? The president's threats against Canada and Mexico over non-trade issues reinforced the belief that he was using levies as a negotiating tool. His remarks on Wednesday suggesting 25% duties on European automobiles and his plans to proceed with levies on Mexico and Canada in April, when he had previously talked of a March deadline, provided little clarification. They're consistent either with using tariffs to raise revenue and make it easier to cut taxes, or with another round of bruising negotiations designed to win concessions. As Trump badly wants lower rates and a weak dollar, he might well duck major new tariffs. Logically, a trade-off is a realistic expectation, especially with the fine details of the re-industrialization plan still lacking. But it would be dangerous to assume this administration isn't serious about tariffs. This is how the currencies currently caught in the U.S. crosshairs reacted to the president's comments at the cabinet meeting. All weakened, but not by that much. All right, so you see the euro here, the Canadian dollar versus the U.S., Mexican peso, offshore renminbi, the Chinese yuan. Charles C., head of America's macro strategy at BNP Paribas, expects very large tariffs by the year's close, pointing to Besant's recent remarks. C said that foreign exchange is just a mechanism that balances competitive forces around the world. As the U.S. increases the average tariff on the rest of the world, that makes the U.S. more competitive. Moreover, we expect the Fed to remain on hold for the rest of this year, which should mean that interest rate differentials continue to favor of the U.S. dollar. A strong dollar would dent EU economic growth, worsening a potential significant deterioration in transatlantic relations. Bloomberg Economics' Jamie Rush and Mava Kozin argue that in the worst case scenario, a blanket 25% tariff could hit European gross domestic product by as much as 1.5%. The experience of Canada and Mexico has been that political concessions can at least buy time. What sets the EU apart is that Trump's grievances run deep and are multidimensional. In fact, he said on Wednesday the bloc was formed in order to screw the United States. Goods trade imbalances, digital service taxes, low defense spending, and higher sales taxes are all on the list, and the EU will not be able to address anything like all of these. A point of hope for those who expect a weaker dollar is Trump's pivot from blanket tariffs to reciprocal tax measures. But Gavikal researches Judith Sickhand, argues that this is easier said than done. Based on the details available, he said was unlikely to achieve fairness and reciprocity. If the administration does attempt to implement Trump's promise, the results are likely to be an administrative debacle, along with retaliatory escalation that could fatally undermine the foundations of the global trading system. For these reasons, the U.S. is almost certain not to proceed with Trump's plan in full. However, selective actions against high-profile targets could still prove deeply destabilizing. Should the U.S. proceed with an expansive reciprocal approach, it would have to comb through a complex maze of thousands of product categories for multiple countries to apply appropriate tariff rates. Thus, Sikhan suggests a focus on major trade partners is more likely. Countries may be willing to cut a deal to escape, perhaps through agreements to buy more U.S. liquefied natural gas, or take on more defense purchases that would still strengthen the dollar. All right, they're going to talk about NVIDIA here. Like, what does this have to do with anything? Nope. Okay, I'm not going to read that. All right, now let's see what this has to do with the Ukraine. All right, what was going on with the yelling and screaming last week? Here's how Trump's Ukraine and tariff policies are linked. All right, this is March 3rd, today, Sean Donnan. Currency wonks are fascinated lately by the idea of an international Mar-a-Lago accord that might one day yield a dollar devaluation, mainly because the author of a November paper proposing the notion is Stephen Mirren, the incoming chair of President Donald Trump's Council of Economic Advisors. But the focus on a potential repeat of the 1980s Plaza Accord misses some of other Mirren's ideas more immediately relevant than the notion of a distant grand bargain. Read it today, and it's not hard to see how Trump's tariffs and Ukraine's policies are about to collide as a new world order takes shape. Much of Mirren's paper is actually dedicated to tariffs, and how incoming White House advisor believes the U.S. should use them in combination with long-standing security guarantees to pressure the rest of the world to fall in line with Trump's vision, which makes for timely reading, as tariffs of as much as 25% on imports from Canada and Mexico are due to take effect Tuesday, and ones aimed at the European Union sit just weeks away. And of course, as European leaders scramble to manage the after effects of Friday's fiery Oval Office meeting between Trump and Ukraine's Volodymyr Zelensky. Read the paper, and it conjures up a vision of a near future in which the U.S. and its Western allies don't just have a falling out over Ukraine, but are embroiled in an escalating and linked conflict over their economic relationships as well. It's a world in which the fact that Trump has called for another 10% hike in tariffs on imports from China to take effect as soon as Tuesday, as well seems like a minor irritant. Firstly, Mirren has a broad view of how the U.S. should use to calculate tariffs that starts with a list of 11 questions. There are economic ones, such as whether a country suppresses its currency or respects U.S. intellectual property. And then there's others, like whether nations pay their NATO obligations in full. The final one, do the nation's leaders grandstand against the United States in the international theater? retaliation impacts. The second relevant point is how he views the US's long-standing security commitments as leverage to get other countries to accept Trump's tariffs. It's Miron's prescription for how the US should respond to countries that retaliate against Trump's tariffs. As Canada, Mexico, China, and the EU all have said they will, that offers the greatest evidence of the blurring of lines between economics and national security going on in Washington these days. Miron writes that retaliatory tariffs by other nations can nullify the welfare benefits of tariffs for the US, and that therefore preventing retaliation will be of great importance. Miron dismisses China's retaliatory power because of the imbalance in trade. The US can mete out more pain on imports from China than vice versa. But for the rest of the world, he suggests Trump simply merges national security and trade policy explicitly. The US, he writes, could treat its defense umbrella as less binding or reliable for nations which implement retaliatory tariffs. And if that fails, it's not clear whether one should view the failure of this deterrent as a bad outcome. If the EU retaliates with tariffs but boosts its defense spending, that will result in alleviating the United States' burden for global security and allow it to concentrate more on China than Russia, all while generating revenue. There are what other economists will tell you are fundamental misconceptions in Miron's paper, including who really bears the cost of tariffs. Miron argues currency swings means other countries do, while importers will tell you they write the checks to customs, and economists will add that consumers in the end feel the pinch. But those misconceptions are fundamental truths in Trump's White House, as is the view of a world in which economic and security alliances are treated not as durable ways to bind common visions, but as expendable assets in a new transactional world. What Trump does this week to Canada and Mexico, the US's most important economic allies and free trade partners, will have major consequences for North American companies. It would be wrong, though, to view what happened to North America as unrelated to the transatlantic relationship and Ukraine. Broader Western alliances are being tested, and in the mind of at least one Trump advisor, that's the point. All right. Let's see. Semiconductors, about Japan here, Korea. All right. Okay. I think that's it. All right, that's it for that. I think I have two more articles, I suppose, but I don't think those are going to be important. Let me see. I think that's going to be good enough. We hit 1 hour, so that'll be good. Perfect. Yeah, I don't think I need to read the last two, but you can go to the description and you can read the others articles if you wish. But I think that those three altogether are going to be a big deal. So with the Posner thing, so I was hoping this third article would talk more about what's going on with Ukraine, but apparently not. So, man, do I have to go re-find those old papers from Posner and fucking Posar, whatever his name is? All right, let me check Bitcoin for you guys before we leave. See what Bitcoin is doing. So this is how it ended today. You see that? We got a nice green candle from Sunday into late or early morning, late night, early morning, and then we reverse it today. So there was a video on CNBC talking about like a bunch of people on Twitter, I guess a bunch of his cabinet arguing about this stuff, like what's going on with the crypto thing. So yeah, there's some dissension about what's it going to do. And if we look at Cardano, so we're getting back some of the losses, from the last several months, but still, yeah, we pulled back halfway through for ADA, Cardano, Ripple. Yeah, losing most of that one. So back at $2.40. So Cardano's at like 85.88 cents. And you got Solana. Well, lost all of it there. Okay. So those three are being added to the reserve, apparently. Solana, Cardano, and Ripple. So on top of Bitcoin. So we'll have to come back to this into Friday. Friday, Trump is going to have a meeting at the White House, I believe. So let's see, March 7th. Crypto Summit. It's going to be a crypto summit, yeah. So it'll be at the White House. See how that goes. But if you just look at the chart by itself, though, yeah, you're just going to have to say, well, what does that mean? I mean, we have a nice clear volume here on Friday, pushing this thing back from 78,300 to about 84,000 on Bitcoin. So then we get to move back up, but then we reverse it back. So, okay, maybe we're still in this range. Here, I'll show you another one. Here's another way to look at it. We have this downtrending on Bitcoin. So we reversed. We're still in this range here. That's downtrending. We're not in this range that's going horizontal, though. That means you got to get back to over 92,000. We already failed there. I was hoping it would fight more at 98,000 today, but it didn't do that. So I guess we got to wait for Friday. Oh. Annoying, very annoying. But so I think yeah, if you guys are ready to short, we gotta get ready to short. So we can use MSTZ. Yeah, I could have done a day trade today to use MSTZ to short. So if you want to short Bitcoin and the Nasdaq together, MSTZ MicroStrategies. All right, so definitely you can short this one. This is 2x leverage of MSTR going the other direction, the bearish direction, or you know, if you know options, yeah, you can just short MSTR. I don't think they're cheap though. I think MSTR options are pretty. I think because CKJ3 mentioned that they were pretty pricey, these options for calls and puts. Let's see what else. I'm gonna put in the chat the bear ETFs, and then you guys can keep note of that. So if when we're ready to short the market, there you are. 3x bear small cap TZA, 3x bear semiconductors SOXS, 3x bear Dow Jones Internet WEBS, and 3x bear Nasdaq SQQQ. All right, guys. I'll see you around later this in the week. I'll definitely be yelling and screaming about something. So we'll see how that goes. All right. Later, man.
Feel like I should, feel like I should, feel like I should, feel like I should go. Go. Feel like I should go. Feel like I should, feel like I should, feel like I should, feel like I should go.